Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, December the 8th, 2025. I'm going to break the mold a little bit over what I did last week. Last week, I was mostly doing the podcast right around the time the market was closing and usually online, kind of taking you through the close. Not going to do that today. It is not quite 1:30 p.m. my time, which means it's 3:30 on the East Coast, which means the market is open for a little more than a half an hour more from right now. And I don't have any intention of staying online and taking you all the way through the close. This is not going to be a 30-minute podcast. I'm going to get this done a little bit early. And the reason I want to get it done a little bit early is because I hope people have a chance to look at this and watch and maybe enter into the new trade before the close of the market today. Now, I've got my order open for the new trade for this week, the new spread trade for this week. The limit price I set is a little bit lower than what the mid price is right now, but I'm going to stick with that limit price for right now because I think there is at least a chance, at the very minimum, a chance that it actually will still get filled. We'll see. It's not a guarantee by any stretch, but we'll see. But I'm hopeful. I'm hopeful that I actually get filled on this new Micron trade. I'll talk more about that in a minute. For right now, look, the markets are down today. You've got the Dow down 244, not as deep as it's been down over 300 at one point today. S&P down 30, and I think it was 33. It was down more than 50. And the Nasdaq has been down as far as double this, I believe. It's showing down 71 points right now. This has all come back a little bit in the last 30 minutes or so. I'll bring up the Nasdaq to show you because I think it's had the biggest change intraday. You can see, well, maybe not quite as far coming back as I thought, but the Nasdaq definitely was down deeper. That might not represent 150 points down. Nasdaq spent a fair amount of time this morning in the green. Went negative, came back up. This might have almost been back in positive territory, I think, and then it went down to its deepest point and is making sort of a gradual comeback. It would be nice to see it get positive today. I'm not expecting that. I don't care if it makes it back to positive territory. Well, I shouldn't say I don't care. It'd be nice if it did, but I don't think it's going to. With about 30 minutes left to trade, I think maybe this momentum continues, or you see a drop off and you see session lows. Either way, I don't think it's going to be real bad. I don't think you're going to see a massive sell off or anything real major that takes us, dramatically past the session lows. And I think the reason for that is right now there's just a little bit of nervousness. The VIX is up a little bit today. The Fed makes a rate cut announcement on Wednesday. They meet starting tomorrow morning. There is still a very strong sentiment towards a rate cut, but maybe not quite what it was, just as little. Well, I guess actually this has gone up a tiny bit. I thought maybe it'd come back down a little bit, so I was speaking a little bit too quick. This was I want to say 87.2 at the end of last week. Now it's 89.4. Definitely, when you've got almost 90% expect a rate cut, that is probably what's going to happen. But there's news today and talk today that the Fed is very split, more so than normal, and not just split in two, with half the Fed govs thinking that we should have a rate cut and half thinking it's not. I'm hearing on TV mostly. I'm watching Fox Business News, going back and forth to CNBC a little bit, but I'm hearing that there might be three camps in the Fed. One that's in favor of a rate cut, one that's saying let's take it easy and maybe hold rates, and that there might be a few dissenting voices saying, look, inflation is at risk of getting out of control and we might need to raise rates. And so if you've got three factions, I don't know what that does in the actual Fed meeting. And here's what I mean. When I say I don't know what that does, I know that there simply has to be a majority of Fed govs that have a vote to determine whether there is a rate cut or it stays, or a rate increase or it stays. I think most of the time the Fed is in sync with each other and they're thinking the same thing, whether they're persuaded that way or not. I think most of the time they get a majority or like not a majority, like a unanimous decision or close to it. If there's a dissenting voice, it's one, maybe two dissenting voices. But it's usually like if there's a split, it's like most people in favor of a cut and a few that want to hold, or most people in favor of a rate cut and a few that want to hold, or most people in favor of a holding and a few that want one of these or the other. But I haven't heard very often in the past, and I have to confess I haven't studied it in detail. I haven't heard in the past that there's very often a situation where there are literally three different things going on, where there are a group that want to cut, there are a group that want to hold steady, and there are a group that want to increase rates. And that's what I'm hearing today. It still seems very likely that the Fed is going to cut rates. If there are actually three different factions, I don't know if there has to be a 50.1% majority. I don't know if it has to be like a one vote more than half majority, or if it is simply whichever decision gets the majority. So in other words, if you had 40% of people that were saying cut and you had 30% that were saying hold steady, well, let's say 35%, and then you had 25%. I hope that adds up to 100. And then you had 25% that were saying let's raise rates. Hopefully it's as simple as this 40% winning out and you would get the rate cut. But then you might hear in the commentary or in the coming days, whether it's Wednesday after the announcement is made or whether it's in the immediate days following, you might hear that it was this divided, and all of a sudden people lose faith. Even though there was a rate cut, people lose faith in there not being, in not having a united Fed. They start wondering, well, what does that leave in store? What's going to happen in the future? What's going to happen going into 2026? And you could get some real nervousness that even with the expected rate cut, could create a sell-off. You've also got a situation where a rate cut could absolutely end up in a buy the rumor, sell the news situation. We talk about this from time to time, where this is what everyone expects, and then once it happens, there's this little letdown in the market, and we see this little sell-off. Not long-lived, maybe 2-3 days, maybe 4 days, maybe into the early part of next week. But then I still think as long as there is a rate cut, and as long as Jerome doesn't come out and say something as pessimistic as that's it, there will be no more rate cuts under my watch, which means, the first three meetings in 2026, if he comes out and speaks in a somewhat definitive and somewhat defiant way about there not being much of a possibility for rate cuts going into next year, that could really shake markets. That could really upset people. That could be a situation where people are just flat out scared about what might happen in the future, and it could get kind of ugly for the remainder of this year. And if I thought for one second that Jerome Powell was an unbiased, non-political person, I would tell you that probably what he'll do is announce a rate cut and then be a little bit ambiguous and go to that line that he has used often. We're just going to wait for the data. There's no guarantee we'll have more rate cuts, but certainly we will if it's justified. And if he said something somewhat ambiguous like that, I think that would actually be a good thing. You could actually see the market's overall benefit in a scenario like that. But if Jerome is the petty political person who I think he is, he might come out and say, that's it, no more rate cuts under my watch. I think we've gone far enough, or maybe even gone too far. And it could really roil this market pretty heavily. So we'll see. It's going to be interesting to say the least. I say that so often. It's been an interesting day, or it's going to be an interesting week. It'll be fun to see what happens. Let me use that as a little bit of a segue into the trade that we're putting on. We've done several longer term trades recently, trades that I fully expect we are going to carry into next year. I think all three of the spread trades, or four of the spread trades that we still have open, we plan on carrying into next year. I chose a long iron condor on Micron this time around, because I think on or before their earnings, you're going to see Micron run back up to their all-time highs of 260 or fall very easily back down to 220. And we only need this to go up to about 250. I think if Micron went up to 250 or down to 230, we would be in the money on both options on the put side or both options on the call side. And if we, in fact, get that kind of a scenario where we are fully in the money on one side of the trade or the other, even if it's for less than our target percentage, we will get out before the earnings date. Now, earnings is scheduled for the 17th, and I believe they report after the market closes. Let me double check that. Um, yes, 4 p.m. after the market closes. So you have all day on the 18th, all day on the 19th that Micron will continue to trade. If they have not before the earnings moved up towards this 260, where even with a smaller profit, 10, 12% instead of the 20% we're targeting, we could get out, or they have not moved down or below 230, then if they're still somewhere close to where that in this 240 to 245 range, or even a little bit below 240, if that ends up being the case the day before earnings, we'll stay in the trade through earnings. And I think before the 19th, you'll see a pop to the upside and well above 260, or you'll see them fall to 220 or below. So I'm fairly confident that Micron, even if we only have a couple of days to trade following the earnings report, I think there's a very good chance that we get out of this trade with profit. All right. There's a lot going on with collar trading and with triple play trades. I only had one triple play trade fill this morning. I was able to successfully get into a long iron condor on Lululemon. They report the 11th. Let me double check that too. They report on the 11th, and I went out to the 19th. For the expiration of the options. Yeah, they report Thursday after the market closes. So plenty of time for them to pop and go one direction or the other. And I think Lululemon will move there. I tried to also get us into a long iron condor on Costco. Couldn't get it to fill, and it doesn't look likely that it's fill. So I'm going to work on a couple more triple play trades tomorrow and Wednesday. We'll just kind of play it by ear and see what looks like we can get into it, what looks available. I'll definitely get on a few trades for the triple play this week, but I'm not going to push something that's just not there. There's a few other companies reporting earnings. It might actually be better to wait until see what the Fed does on Wednesday, and then maybe do something directional based on what the Fed does. So we'll cross that bridge when we get to it. But I'm going to wrap this up so I can hurry and get it converted and get it online. I've already sent the Signal newsletter with this new Micron trade, but it would be nice for you to be able to kind of read the explanation and get some more details and give you a chance at least to open the trade before the market closes today. So I'm going to wrap up right there. I'll be back tomorrow a little bit closer to the close of the market and probably be recording this as we go through the close. But in the meantime, I hope you had a great weekend and have a great day tomorrow. Thanks, everyone. Bye-bye.